It's been a bloody day in the markets. Hey guys, how are you all doing today? This is Azam with INVESTOFY. Hope you guys are well. And it was a crazy day. We saw the markets go down quite a bit and then towards the end rebound again. So as I had discussed before that, all right, is there a market crash coming in the stock market? Again, the answer is no, but we'll look at a few things as to what happened and why did we have this crash? Why are the stocks falling so much? So let's get right into it. What we see right here is that obviously Microsoft, the big tech, was still relatively red today. Microsoft was down a bit. Apple kind of pushed back up. NVIDIA lost a lot too. Qualcomm. So a lot of our stocks that we were owning, like we had to sell Qualcomm, and just because these stocks were losing. In fact, I want you guys to focus on Google, Facebook, and Twitter, right? All three of them were positive. In fact, Facebook was up 2.12%, Twitter was up 3.8%, and NASDAQ, when the market opened up, was down almost 4%, but ended the day at being up 0.5. So it's a good sign. And again, I don't think that there's a stock market crash coming. If anything, there's just been a little bit of a concern, and the concern is coming from inflation rising in the US, right? And I'm just going to go to this market watch list article about Michael Burry, Dr. Michael Burry, who warns stimulus may stoke inflation, basically saying that the more money people get in their hands, the $1.9 trillion that's injected into the economy through people, they're going to go and shop for things. And once people start shopping again, what happens to prices? They go up. And those concerns for inflation led to this kind of a concern for, oh, let's sell the stocks because, there's this fear on the market. And we saw gold and silver gaining some momentum after that. So that's where this is coming from, right? And in this article, they go down and they discuss a few things, that the global debt surged more during pandemic than the 2008 financial crisis. And I'm pretty sure it did, because this was a global pandemic. It's crazy. We're far from done with it, right? And a few more things that are also brought up is which is substantially down from 14.8, but well above. But a few things I want to show you guys. The inflation rate. This is Statista, one of my favorite websites. As a data analyst, I love this site, right? And it shows you the inflation rate from 1990 to 2020. 1990 was 5.4%. Now I want to compare this to the 2008, where it was 3.8%. It dropped to 0.4 right in 2009. And currently it sits about 1.2%. So the inflation rate isn't that high, but let's just move to another one. Debt to GDP, right? And debt to GDP has basically been one that has kind of increased a little amongst households from 2019 third quarter, which was 72%, to 78% in developed markets. And then in developed markets, average was that, but US, it's gone from 74% to 81%. These are concerns, and I understand where Michael Burry is coming from, that, once the stimulus is injected into the markets, it can reach to prices, and that's led to the concerns in the stocks as well, and they've been falling. He also has concerns for Bitcoin, which he says down here is like, as an alternative to the dollar, is at risk from government crackdown, which is true as well. That Janet Yellen also discussed about it as to, it's not as potentially viable. So that's the thing. It calls it extremely inefficient, and we've seen that Bitcoin is dropping. But the fact is that Bitcoin is still being used as a currency, and it's going to continue being used by people. So I personally don't think Bitcoin's ever going to go, but for now it's dropping. And that might create an opportunity for a lot of people that wanted to get in and couldn't get in at the 30,000, 35, 40,000 range. Now they have that opportunity. So that's what's happening. And that's why we've seen these stocks kind of rebuild now. As for a free stock, a stock to look at, to buy, I would just go to this bad boy right here, Facebook. Facebook is arguably, again, one of the best balance sheets in the world this company has. And one can just buy it at whatever the current market price is for Facebook. If you look at this, yeah, I would put stop loss at about 240, and that's about it. Yeah, 240 or 244 as a stop loss, and just hold on to this company. It's just as good a stock that comes. There's a lot of companies that have been hurting that were in our portfolio, and we had to sell a few of them, like Qualcomm, but they kind of pushed back up, after being down on the day. They're all great companies, right? The reason we sold is because they hit our stop loss, and I stick to those rules for a reason. I just don't want to just break my rules. But when you look at from a long-term perspective, right, semiconductors, tech companies that we invest in have like pretty solid sales. They have, really good investments done in R&D, and they have their own competitive advantage and moats. So with that being said, is the stock market crash coming? No, there isn't. There are concerns about inflation from the 1.9 trillion that will be injected into the economy, but great companies are still going to be there, right? They're going to be there tomorrow. They're going to be there perhaps 10 years from now as well, as long as they keep on building, right? And that's what we do here at INVESTOFY, is try to tell you guys about great companies to invest in, like Facebook. So that's that for today. And I hope you guys have a wonderful evening. Let me know if you have any questions. Once again, this is your boy Azam with INVESTOFY. Thank you very much, and take care, guys.